I'm sure you've noticed by now, things are really starting to change in the housing market. Well, one big thing that's happening right now is a lot of houses are coming back on the market. And if you're a home seller, you need to stick around to find out what you need to do to make sure your home is not one of them. If we haven't met before, my name is Hudson. I am a real estate agent here in the Las Vegas area. And every week I put out more and more videos talking about Las Vegas and the housing market, especially in these trying times. If you need anything, go ahead and reach out to me. My information is below where you can get on my calendar, or call, text, or email. The information is below and in the info tab. I'm sure along with the stock market, you've been tracking the interest rates. As a matter of fact, I've stopped tracking the stock market because I don't want any more bad news, and pretty soon I may stop tracking what the interest rates are doing. Well, here's one thing that no one is talking about too much. Some people are talking about it, but not too much. We have entered a new era in real estate. Just a few months ago, if a house went under contract, there's a darn good chance that it was going to close. Well, that's no longer the case. Right now, we are starting to see record numbers of buyers canceling their contracts. So let's start going over some of the reasons this is happening and some of the things you can do to try to bulletproof your transaction to make sure you can move on to your next destination. So one of the main reasons things are changing has to do with those interest rates. Well, interest rates have gone up and up and up and are anticipated to go up again. One thing that is happening is, let's say someone goes out and get a loan. Well, that loan was based upon a certain interest rate. Well, by the time they found a home, or if they're doing the old, every home looks great now and I have so much choice, and they're now spending 2 and 3 weeks to look for a home, and then they find yours. They put an offer to come to a meeting of the minds. Now they go to their lender. Well, if they did this at 5.5%, it's now 6% or more, they may not be able to afford the offer they put in on your house. So what do? They cancel. Some of the other things that are happening now are contingencies that buyers waived just 6 months ago. They're no longer waiving. They're no longer waiving the inspection, appraisal, or any of this other stuff. All of that is off the table now. So if they start to run into any kind of resistance, first thing they're going to do is cancel the transaction. So how do we start taking care of some of these issues so it works out in your favor? The number one thing that you need to do is help out with the number one cause, which is interest rates. What you need to do is start looking at buy downs on interest. You can buy down that interest for that buyer, which means instead of coming in at 6%, maybe they come in at 4.5%. When that happens, they may be able to afford your house. As a matter of fact, they can definitely afford your house, and there is less likely of a chance that they're going to back out for some reason and go look for another house, because their dollars go further now. Another thing you can do, remember, anytime anyone's running up against resistance now, first thing they do is they bail. Don't give them an excuse to bail. Next reason something's going to happen is the inspection. Well, no one's waiving that like they did 6 months ago. I can remember being in a meeting and an agent was talking about they received a call from another agent, and the agent's going like, we received your offer, but there's something strange about it. She's like, well, what? It's like, you have an inspection contingency in here. She's like, yeah. It's like everybody else. Remember, these were the days when everybody had multiple offers. Everybody else has already waived the inspection contingency. That's not happening anymore. So when they come across that resistance and they see all of these repairs that need to be done, boom. That's another big reason people are canceling. So when you start going, I'm not going to repair this, I'm not going to repair that, you've already fallen into the trap. So let's look at what the trap is. Right now in Las Vegas, 23% of homes that go under contract fall out. Let's call it what it is. A quarter of all homes that go into contract fall out. So if your house goes under contract, you're rejoicing and you're saying, oh my goodness, I sold my house. And then 2 weeks later, no. So let's also look at some of the ways they can get out of that and become that 23% that's going to harm you. Because I don't know if you noticed this, prices aren't going up. They've barely been going sideways, and the props are going to go down again, especially with the latest interest rate hike. So you don't want to be in that situation where you have to put it back on the market and you now have to list it for less than you actually received in an offer before. So one of the things you can do is do a pre-inspection. You need to have your house look better than your neighbor's house. You have to make it look better than the house, the subdivision over. Take care of those little things. Go get a pre-inspection. They'll do that. They'll go through, tell you everything that's wrong, and you can figure out the issues you're going to have in the future. You can either fix them now, or at least you'll be prepared. You're going to know that now people are going to ask for more stuff. In the past, where they may have asked for one or two major items, they may go after the entire list now. Who knows? The buyers are now kind of in the driver's seat. You can even tell from the new home builds. New home builds 6 months ago didn't even pay commission to the realtors. You didn't get anything. You had to pay $50,000 in land fees. You had to wait 8-9 months for the house to be built. Now all of these contracts are canceling. Well, those houses are being dumped on the market now, where they're paying 5 and 6% co-op, also known as commission to the realtor, where they're giving $20,000 in incentives to the buyer and then lowering the price. Things they have never done, because all of that inventory that is now sitting there from people who purchased their house 6 months ago when interest rates were 3.25%. You are now competing against them also, which means you need to look at what you paid for your house, what it's worth now, and what it's probably going to be worth in about 3 months. And you need to shoot for that figure. You have to start taking the ego out of this. If it's because your neighbor Charlie sold their house and it was overpriced and they got $30,000 extra for it, no. You need to listen to your real estate professional. You need to go in with an objective mind to see what the house is really worth now, and possibly a month or two from now when somebody actually makes an offer. Because if you start off and at the height of the market your house is worth 500 and is now worth 465, great. Well, a month or two from now, especially if interest rates go up, your house may be worth 450. Aww. So you probably want to price for that, because right now, from what I'm noticing, the only homes that are selling are the prettiest and the cheapest. So if your home isn't super pretty, did you know you can make it that way? There are programs out there. Let's say you need to have some carpet changed, you need some flooring work done, you need some painting. There are companies out there that will take care of it. One that I'll mention just straight to you. It's called Curbio. They will actually only get paid after your house sells. So you don't have to come out of anything right now. My company, we have concierge service, Keller Williams, and they will do the same thing. And these aren't things where they go and do $10,000 worth of, well, I can't speak for Curbio, okay? I can only speak for Keller Williams. Our job, at least our concierge service, is meant for you to sell your house and make our money off of the commission, of course. No extra commission, just the commission. But if you put $10,000 in your house, you may have just saved that sale or even raised what the value is. So these are things you need to look at. Your goal is to make the most money possible in the shortest period of time. And another one, if your house is not moving right now, you're not getting any showings, your house is overpriced. Pure, simple, end of story. If you're getting a bunch of showings and no offers for condition and everything else, your house is overpriced. Instead of running around trying to blame other folks, saying, oh, you realtors don't know what you're doing. Yeah, they know what they're doing, because their buyers are seeing 10 other houses, and none of those 10 houses have offers. Do you want to be the 1 out of 10 that gets an offer, or do you want to keep blaming folks? Now, I'm giving you some harsh talk right now, but it's talk that you need, that other people aren't giving to you. Do you want to sell and get the most money possible, or do you want to wait? Do you want to take 50,000 under the peak? Remember, this is unrealized gain, kind of like the stock market. If it triples and then goes down by 20%, people are just lamenting the 20%. What about the fact that it tripled and then went down 10% or 20%? So if I had $100,000 and it was worth $300,000, then it fell by 20%. Now it's worth $240,000. I've more than doubled my money. But the only thing people are thinking about is because the stock market had a huge run up, they're thinking about the 300. What about the 240 that you can walk away with? Kind of a different perspective. That's what's going on with housing. As much as we talk about housing being down, do you know year over year it's actually up? By the same token, every single month that passes, your profit decreases. So you literally could have bought a house last year and you could be at least, very least, breaking even. If you bought a house 2 years ago, you're up 20, 30% according to where you are in this country or even in this city. Look at those numbers. Don't go that housing, if I'd sold my house 6 months ago, I would have gotten $500,000 for it. That's great. This is now. 6 months ago was 6 months ago. Same as the buyers who 6 months ago were going, if I had bought this house 2 years ago, I would have bought it for $300 and now it's $450. Yeah, 2 years ago it was $300. Now it's $450. Or then it was $450. Now it's more like $425, $400. It's just the opposite. You have to look at what the market is doing, nothing else. Market's down, but if you bought 2 years ago, you're up. You're a winner. That's like your stock market, tripling and then going down 10% or 20%. So look at these numbers. Make sure you're taking care of yourself. You don't have to follow my advice. What I'm telling you is the stuff I'm telling you right now is what's working, especially things like interest buy downs, because that is where it's at. It is the interest rates that is killing this market right now. In all honesty, the Fed is doing what they had planned to do. They were trying to slow down the economy, and they did it. Look at the housing market, look at the stock market. All because just a couple of months ago, we had 11% inflation. They want that stopped. And to stop it, they will stop the housing market. Don't be a victim. And if you don't want to continue to be a victim, go ahead and hit that like button, subscribe, leave a comment. And most importantly, if you need to get a hold of us for any reason, get on my calendar. Link is down below. Over in the info tab is, of course, all of my information, call, text, email. I'm more than glad to talk to you. We'll get someone straight out to help you.